Good morning. Welcome back to Morning at NTV. My name is Malaki Vilodera. Now today on the Kickstarter segment, we'll be taking that conversation that we had yesterday a little bit further, and this time round, let's focus on financial inclusion. And so to talk about that and that affecting the poverty levels in the country is Madam Rashmi Pillai, who is the Director of Programs at Financial Deepening Uganda. Thank you so much for coming in studio.
Thank you.
We're also joined by Madam Catherine Wines. Yes, Wines. I got that right. Who is the co-founder of World Remit. Welcome to studios.
Thank you very much.
Okay, we saw this report, and this is the State of Uganda Population Report 2018. And the numbers are quite worrying. Now, financial year 2012-2013, the poverty levels were at 19.7%. And financial year 2016-2017, that figure rose to 21.7%. You can imagine, of course, now 2018 coming to an end, what that will mean for the country. What can we attribute this to?
So first and foremost, this statistic is certainly troubling and something that gives us pause to consider and think about. But it's a 3 percentage point difference if you look at it. And there has been a significant wave of population increase between 2012 to 2017.
Right.
So just the demographic of people coming in and becoming adults is significant, has given that rise to higher poverty headcount ratios. But in terms of financial inclusion, what we should be thinking as people working in the space is financial inclusion in of itself has no value. You need to combine it with some kind of income generating activity, because what's the point of having a bank account or a mobile money account if there is no income and there are only outflows? So as policymakers and private sector and development partners like us at FSDU, we're trying to see how can we increase income, how can we increase livelihoods so that access and usage of financial services is more meaningful.
Madam Catherine, we actually were having this conversation and we were saying that the only source of financial inclusion, something that we were proud of as a country, was mobile money. But of course, we've been seeing the statistics going under in terms of the transactions on that particular platform, thanks to the taxation of, the mobile money platform. What ideally would have the government done with regards to that?
Well, obviously, I think when we heard about the tax, we were concerned because that generally has an impact on people using the service, and in fact we saw that after July, when the first tax was introduced of 1%, we saw a decrease of about probably 11% of transaction international remittance to mobile money and people switching to cash, which is obviously very concerning because you don't want people to switch to cash. You want people to keep the money in the economy and digital. At the same time, I think it's kind of leveled off, and I know that now there's the tax is going to be reduced to 2.5, and also being not being taxing every single transfer. So hopefully we'll see probably a reversal of that decrease, and I think it's very important because what we've seen in our business is the importance of mobile money in helping people, especially women, to access financial services, to become financially included.
Right. When I look at this particular report, and this was of course done by the Financial Sector Deepening Uganda, it says that 22% of adult Ugandans are not financially included. Yes. What can we attribute this to? Is it because of the levels of unemployment? You are saying that financial inclusion cannot work, in isolation. There has to be an income generating activity that goes with it.
So there are a lot of indicators. So the profile, let's compare two profiles. Someone who's included and somebody who's not. Somebody who's included typically has some income generating activity, either that's farming, casual labor, what have you. They have primary school education. They're often, most of the country is in rural areas, but if they are a bank account holder, they're most likely going to be in an urban area, and they're most likely going to be men. Now, if you look at another profile of somebody who's completely excluded, they're more likely to have no income source or be dependent or have very sporadic income source. They may not have very high education levels, definitely not more than primary education, and they're most likely going to be in rural areas. So in a high percentage of them are going to be women.
Right.
Yeah.
So those are the composition of the people who are excluded in the country.
Yeah.
But at the same time, if we see, there's been progress. If you look worldwide, there's been a reduction in the last 3 years only, from 2.5 to 1.7 billion people being unbanked and having no access to. So there's a big decrease in unbanked, specifically due to mobile money. So I think mobile money are still, can help people because, and we're in the world of remittance. So we see people who've got family overseas will receive money remittance, and maybe that might be sometimes their only source of income. But that income can help them, and we've seen it with our customers. The pattern of transaction has changed over the years. Before mobile money, where it was all cash being sent to one person and that being maybe distributed to several people, to now being sent to actual individuals and a smaller amount to a mobile money account.
Right.
And often in the rural areas, we can see that from our data, is that a lot of the transactions to Uganda, for example, are going to a mobile money account in the rural areas.
Okay, when we look at the statistics, and I'll get you in on this, Madam Rashmi, northern Uganda still leads in terms of the poverty levels in the country. Of course, northern Uganda being a rural setting, it's quite worrying there. It's a totally rural setting. So in terms of just interventions to address that, where should we be starting?
I would say that we should be starting with income generating activities. If that's agriculture and if that's a predominant activity, how can we build better market linkages? How can we ensure that farmers get better yield and therefore are able to also have better prices for their crops? If they're, that is a fundamental starting point. Livelihoods, focusing on livelihoods so that people are able to sustain themselves, because then they're going to transact, then they're going to make a payment. It's only when they have income will they then look to save, and once they save, they want to grow their business. That is a good fundamental starting point.
Catherine?
Well, and it's the development of the ecosystem, as you mentioned. I've seen in other countries, in Ghana specifically, some tech business setting up and helping farmers with an app to help them with that type of situation. So I think it's about, for the government to really help, the sector to develop the ecosystem, and especially with the technology these days is there to be able to help people, and at a relatively low cost.
The conversation has been, them that are able to till the land are the young people. But it's the same young people who are running away from the rural areas, coming into the towns to look for these opportunities. So would having a devolved government whereby every region has all the social amenities such that we curb the issue of the rural-urban migration, would that help, so we can at least have a good number of the young people who are energetic still remain in the rural settings?
So this is a very tricky question. One, it is not a Ugandan phenomenon. Migration is a phenomenon that you'll see in other countries. Young people want to expose themselves to different kinds of economic opportunities, right? But we also need to understand the root cause of the problem. Is it because people just don't like farming? I don't think so. It is because people are looking for upward mobility. They want their incomes to grow. They want to have a more secure future. And increasingly, with population increase, farm sizes are becoming smaller and smaller. Therefore, the amount of income take home that you have corresponding to the effort that you're putting in is significantly lower. And there are so many risks. There can be a risk of drought. There can be a risk of infestation of weeds and insects, etc., which it is a high-risk activity. So the conversation then should be, how can we all as a society think of making agriculture attractive
and enticing,
exactly,
to the youth especially? Yes.
How do we make sure that your investment has some return on that capital? How can we create insurance or weather-linked insurance products that protect farmers? How can we give them better quality seeds? How can we link them to markets? How can we have warehousing capability because you've had produced excess grain? All of those are important aspects.
And I think one way to help is also pull on the diaspora. I think there's not enough work done by the government to back to the diaspora, say, look, we need to invest in the country to set up the system. I know the diaspora does it on a small scale, and we see, I speak to a lot of our customers who send money directly to their family to set up micro businesses. But I think there's an opportunity, you know, diaspora. I was in the US recently and speaking to people there, and ladies from Kenya, and they wanted to send money back home to come help, but there was no real mean to do so, and I think that's where maybe you know, government could channel that through diaspora bonds or such like.
Let me give an example. In Kenya, they were able to tackle that issue. Well, it's still work in progress, but at least they've made some, you know, progress. What they did is they realized that there's a lot of movement from the rural areas into the big cities, Mombasa, Kisumu, Nairobi. And so they thought, how do we curb this? How do we ensure that the young people who are totally energetic stay at home, stay in their regions, in the rural areas? So what they did is they came up with county governments, and these are in the totally different regions. And what they did is to invest heavily in these particular counties. So they provided social amenities. Now you will find universities in rural homes, you know, in rural settings. You will find hospitals there. You will find industries being invested there. So now these young people have no reason to move now to the urban centers, quote unquote. So would that help us as Ugandans as well?
I'm no expert on Kenya, but I think that is a good solid approach, because then what they're tackling is the reasons for migration, right? Because they're saying, okay, you can migrate for multiple factors, which is healthcare needs, employment needs, and other types. Let's bring that closer to you so that we don't overpopulate our infrastructure and overburden a city infrastructure, because at some point we will not be able to support that.
Yeah. Madam Catherine, I want to get you in on this one. We've seen even the statistics. Them that are hit the most is the women. We are always on top in terms of the negativity, the negative effects of all this, in terms of this conversation on financial inclusion. Is it just because we're still a patriarchal society?
I think cultural issues are still a big problem, but I don't think they are, you know, insurmountable. And I've certainly seen in our business the change of, you know, I've been in the remittance sector for many years in a more what I've called a traditional offline sector. And since we've, you know, we've set up World Remit as an online, you know, digital platform sending to mobile money, we've seen a big difference in terms of, you know, women being, you know, if you think, as a sender, you know, 50% of the senders are women, you know, and overseas, the diaspora. So, you know, they've got a big part to play, and they send to their family. And now the recipient also, as I said, more and more, because of mobile money, are women. At the same time, there's still, you know, low take-up of mobiles by women. And I think, you know, there's, say, cultural, but also financial, you know, literacy, which is a problem which needs to be resolved. But that can be easily resolved, you know, by programs. But I certainly see there's a trend. Obviously, not as the take-up not as good as for men, but it's still a big increase and increasing.
Right. Just the other day, we were having a conversation on savings, financial inclusion, and the beauty is we're always in touch with the people on ground, and our man on the ground, Andrew Chamagero, goes there. And what stood out the most is that even with the financial institutions, they don't go down to the common person. What they were saying is, and of course we have these bites, I don't know if we can get them. What they were saying is, even if you go to a bank, whatever document you're given is written in English. How many Ugandans can actually read English and understand? So that automatically keeps them off.
And that's where the mobile money again can help, because it's a lot simpler. But as I said, it's not completely simple to the fact that, you know, if you are totally illiterate, it's still complicated, and that's where, you know, some program, I've seen some program for literacy, you know, among women in various countries. In Tanzania, I know they've done a lot of work to help women, you know, literacy, and therefore they can use mobile money.
So one point to that, yes, mobile money tackled some of that, but the banks, for the longest time in Uganda, we did not have the agent banking regulations, which came out last year. What that means is that banks and their representatives can now get out on the field, and you know, they can have small dukas, etc., be closer to the people. They don't need a bank branch anymore, and therefore the agent is your neighbor's son, and the neighbor's son can explain the product and service to you. And the Uganda bankers, I would give them kudos. They went one step ahead compared to any of their colleagues across the sub-Saharan continent, and said, we are going to build shared infrastructure. If just like you go to an ATM, if it says Visa and you know that irrespective of whichever bank you're with, you'll be able to withdraw cash if your debit card has Visa, they've set up a shared banking that has a logo of a handshake, and if you see that logo, all the bank's logos that are there, you'll be able to cash in, cash out from that agent. You do not have to go to a bank branch. You don't have to go to the agent of that particular bank anymore. And what they're then telling you is that we will set up this infrastructure, it's shared, we will now compete on better service. We will now compete on better product.
All right. My director Dan tells me that we actually have those bites, so let's listen in.
That we have around are too sophisticated that even their questions are in English. They want so many papers and all that and all that.
Exposure is extremely very important. Many people just can't move into a bank because they don't know what happens in a bank.
Financial institutions are always asking for groups that are formally registered. How do we help these people? How do we go down and pick these people up? Because these are actually the people who save.
The perception is big buildings, clean, someone in a tie speaking English, you go and say, you say, this one went to school. But my dear, this is not what happens. Responsibility starts from you. You have a right to ask about what you want to get from these banks. So please take the responsibility. Explain to your members. It is not wrong. It is a right to you as a consumer of financial products.
So that's the reality, and this bankers, so to speak. So how do we address that issue, and how can banks be deliberate about it in terms of including everyone regardless of whether they're literate or not? Because even us who are literate, at times I'm sure you have had issues with your bank.
Oh yeah.
Yeah, time and again.
Yes.
So you can imagine it will be worse for someone who doesn't understand English.
Well, to be fair, this problem exists in a lot of countries, even in the UK. So there's still a lot of people who are not financially included, because at the end of the day, the banks also like people who have some money. So people who are really poor, don't have as you say, a recurring income, find it difficult, and that's where again, back to the technology, we have now challenger banks in the UK and in other countries, which are looking at a totally different model, and obviously using mobile again, and make it a lot easier for people to access those services, and so that's and at very, very low cost, and because they are offline, they're online and they don't have branches, they can really reduce the cost and make it accessible, because I think that's one of the big challenge with banks is the cost, to be able to reduce the cost to make that product available to everybody.
Yeah, having SACCOs, having saving groups, will that help further in terms of financial inclusion? Rashmi?
Yes, it will. So what we have seen, when we talk about women, there's not everything is negative. First, we are a women-dominated country.
Yes.
So when you talk about SACCOs, when you talk about credit, savings, and insurance with these informal service providers, women dominate. Women save more, women borrow for their business, for their children, but are repaying more, and also take out a lot of insurance. So if there are formal sector providers, mobile money, banks, and any other fintechs included, if you're ignoring them, you're ignoring one of the largest chunks of your market.
Right.
Because the formal sector, only formal sector, is actually very small. It's only 22% of the population. The rest is what you should be gunning after. That's your market share.
Right. Actually, there was a conversation about banks, and what they're being told is stop focusing on the multinational clients. Go back to your person down there. So as we come to a close, how do we deliberately tackle this issue of financial inclusion? What are our take-home points to that? Catherine?
Well, for me, obviously, I'm coming from outside Uganda, but looking at, a lot of countries, especially in Africa, I think, there's different aspects. Obviously, there's, we talk about education and the ecosystem. There's also regulation. I think it's very important for the regulators to help that ecosystem to develop. If we're talking of fintech, if fintech are not allowed to bloom, to develop, and they can do that by a number of ways. Obviously, changing the regulation, but also I'm a proponent of something called a sandbox, regulatory sandbox, which allows companies to test their product in a safe environment and helps also the regulator to learn about that new product. And I think that's very important. So regulation is also very important.
All right. Okay. Rashmi?
I would say, as Catherine, enabling regulation. Second, banks and legacy systems, take a hard look at your business model. If you're not ready for change today, you will be driven by the change.
Right.
So that's the only option left.
Right. Keep your views coming. The hashtag is Morning at 10 TV. Of course, so how can we tackle this issue of financial inclusion and just be able to make sure that we also focus on our loved ones who are, quote unquote, illiterate, them that cannot understand English? How can we involve them as well? Very important conversation. Thank you so much, Rashmi Pillai, Director of Programs, the Financial Sector, Deepening Uganda. Thank you so much.
Thank you.
Catherine Wines, co-founder of World Remit. Thank you so much for making time.
Thank you very much.
Thank you very much.
That has been it for Kickstarter. Morning at 10 TV still continues. Up next is Take Note with Flavio Tumusime. Keep it here.